network too. If you'd like to see myself or any member of the TMC team moderating the Connect session calls, promoting your brand, feel free to get with Tony Bramley on our team there, and we can coordinate that to make it happen. So real briefly for today's call, whether you've dialed in or you're connected via your computer, all lines have been muted. And that's just done to avoid any background noise in your area and ensure that all attendees can hear today's presentation clearly. Now, that said, we do want these discussions to be as interactive as possible. So please feel free to submit any questions that you have throughout today's discussion, and I'll be able to go ahead and verbalize those on your behalf with our discussion leaders. So how do you do that? Well, if you scroll to the bottom of your Zoom screen menu, you'll see both the Q&A and the chat functions. If you click on those, it'll pop up a little box. You can enter in any question that you have for the discussion leaders, and I'll be able to see those and verbalize them on your behalf. Also, today's call will be recorded and available for playback. So all attendees today will receive a copy of the recording as well as a copy of the presentation deck that'll be distributed in a follow-up email that you should receive tomorrow. And just in case we run out of time, any questions that we're unable to address, I will make sure to capture those and send those back out to our discussion leaders for additional follow-up and feedback there. Todd, if you go to the next slide for me. So kicking into today's discussion, got great set of panelists leading today. First off, TMC dual member and new preferred partner to the network on the down payment assistance resource side, Vice President at Chenoa Fund, powered by CBC Mortgage Agency, Todd Ludlow. Hey, Todd, how are you?
I'm doing great, thanks. It's good to see you.
Good to see you. And so also joining Todd, first off, we have TMC Lender Board Chairman, as well as the CEO and co-founder of the first TMC lender member, Alterra Home Loans, as well as Panorama Mortgage Group, Jason Battietto. Hey, Jason, how's it going?
Hey, Tom. Thanks for having me.
Appreciate you joining. And last but not least, leading today's discussion, we've got Nick Goucher, who's the Senior Vice President and Managing Partner at Legacy Home Loans. How's it going, Nick?
Hey, buddy. How are you?
I'm doing well, my friend. Well, appreciate and extremely grateful to each of the three of you for taking time out of your busy schedules right now to lead today's discussion for the benefit of our members at TMC. So on that note, won't waste any more time. We'll dive right into the discussion. And I'm going to turn things over to Todd to kick it off.
All right. Thanks, Tom. We'll start off here with a quote that comes from Bishop Harry R. Jackson. Bishop Jackson is extremely involved in politics. He's actually part of the ecclesiastical black advisors to President Trump. And he has indicated that equitable access to home ownership is one of the most pressing civil rights issues of our time. And we're going to kind of go through and highlight some of those points and as to why everything's kind of coming to a head right now with the BLM movements that are out there and the other challenges that we're facing as a nation because of basically that huge wealth gap that exists between the races within our country. As we see here, home ownership, the home ownership makeup within our organization. And Nick, you have actually some numbers to update. Everybody can see the graph here. Why don't you provide us some information that we were talking about a little bit earlier?
Yeah, of course, Todd. What I was saying to you is that just a few weeks ago, census data actually had an article posted on Housing Wire that in the last 13 years, Black and brown home ownership has increased at its highest level since, pre-recession of 2008. As a matter of fact, Hispanic home ownership rate has increased to over 51%, which is the highest it's been in over a decade. And African-American home ownership has increased 4 points to almost 49%. And so I think it really just speaks to the desire that people of color have to truly be a part of the American dream.
Yeah, that's kind of a spoiler alert to what we're going to talk about a little bit later on today about the huge opportunity that exists here. And then, again, home ownership rates break up by ethnicity, same information, different format for those of you that, the other one didn't work for you. As far as this, but probably the most important thing to break out is that 70% right now of all homes today are owned by non-Hispanics. And a homeowner's net worth is 80 times greater than a non-homeowner's net worth. That's a huge, huge difference, and a real testament to the importance of home ownership and really what we consider the American dream in our country. Because of that makeup, white Americans have 10 times more median net worth than blacks and 8 times more than Hispanics. You can see the breakup among some of the other populations there as well, or even the mixed race populations. Black homeowners have been the slowest to recover from the Great Recession. And it has a lot to do with just the decades of discrimination that have been promulgated by the federal government and financial institutions. We have historical gaps in wealth accumulation. It's much more difficult for African Americans to obtain financial assistance from their family members in order to be able to provide things like a down payment. In fact, the Urban Institute published a 2019 report showing that if black homeownership were the same today as it was in 2000, we have another 770,000 black homeowners. We would have another 770,000 black homeowners today. Again, we're starting to see that gap begin to be made up because of the emphasis that's being placed on this demographic. Lack of intergenerational wealth is going to limit a minority's ability to better fund future generations, things like education, home ownership opportunities for family members, and that continues to perpetuate that wealth gap. So it's just an ongoing cyclical thing that's been going on for decades. And again, as we discussed earlier, this racial wealth gap is one of the driving factors in many of the current and recent protests we're seeing. They're beginning to turn violent. There needs to be change that is brought about to bring the equality to the races, make sure we all have the same opportunities, and we can perpetuate those same opportunities for family members. As members of the mortgage industry, we have a huge solution to this serious problem, and that solution is homeownership, helping facilitate homeownership so that we can begin to bridge that wealth gap. All right. Some of the solutions that we have within the mortgage industry to help facilitate homeownership are down payment assistance programs. We have underwriting guidelines that a lot of times we don't take into account the different needs of the different demographics. We use credit differently, or sometimes we don't use credit. And we need to take into account, how can we determine whether someone, based on really their culture, is a adequate risk to be able to extend credit to. As we'll see here in a few minutes, just the loan originator population is weighted very heavily towards the white population. We don't see nearly enough minorities. We're seeing more and more get involved, but there's still a huge gap between those individuals that are trained to originate these loans and the race from which they come. And then finally, probably the biggest thing we're going to talk about today, I think the most important thing we're going to get to towards the end, is how do we reach out and educate these individuals to promote hope and encourage minorities to become homeowners. That's good for them because it's going to help bridge that wealth gap, but then also we're going to be able to generate more business for our own organizations. All right, future housing trends, and Nick touched on this a little bit earlier. We have, by the year 2025, approximately 2/3 of all new households will be formed by minorities. And then a 2019 report from the National Association of Realtors indicates that there are 1.7 million Black millennials who are mortgage ready today. We're starting to see some of those convert into home ownership. This is currently the largest untapped sector of the mortgage ready market, or a largely untapped sector of the mortgage market. All right. So now we jump into the obstacles to being able to obtain home ownership, kind of the problems that are faced out there. And I look at problems as opportunities. These are the things that if we can solve for these problems, it gives us opportunities to be able to serve the market, generate an income for our families, but then also be able to provide a real valuable service to help bridge that wealth gap. Lack of a down payment is the biggest thing out there. Number 2 was credit history. And then number 3 was mortgage qualification. Former NBA president and HUD Secretary David Stevens, in talking about down payment assistance, indicated that whites can more frequently lean on family for intergenerational wealth to assist in down payment needs, where minorities, especially blacks, may not have that option. The form of down payment assistance provided by HFAs and tribal lenders that provide DPA from secondary marketing gains, perhaps combined with second liens, is the only option for far too many, and may be the only way in which the gap in homeownership rates can be meaningfully addressed. So that kind of underlines the importance of down payments and the need for down payments. Is there anything, I'm kind of dominating this conversation. I really need to let Nick and Jason step in. You guys want to, any comments or anything you have to add here?
Yeah, no, I'll definitely be. Todd, this is some heavy stuff, man. And I hope people who see it, can see how important our work is. I tell our sales force all the time, it's obviously important to make money, but when you get into lending, this is mission work. The impact that you can have on people it goes far beyond the transaction. I mean, so we should take a lot of pride in being able to stand in that gap between those who can and those who can't. I always tell this story pretty often because many times when I'm on these type of calls, we obviously do see the obstacles, and credit, lack of family network, credit being the capacity. So me, being a mortgage banker for over a decade, and 83% of my clients, well, I've done over 1,000 transactions, 83% being African American people. I tell a story about a client of mine named Charlotte Tarver. In 2016, her and I, first met because she wanted to purchase a property. And you realize the reason why so many African Americans get turned down, many times they're just not ready, or they're uneducated about, how to get buyer ready when they're ready to apply for a home loan. She's one of them. And so she's someone who didn't have the income, she didn't have the credit or the down payment to achieve the American dream here. And I'm in LA, so the price points are, a lot more beefy, right, than, middle America. But she still, I think, highlights a part that you mentioned, the idea of hope and optimism is truly important when it comes to lending. So Charlotte and I met in 2016, and she was not ready, but she walked away very hopeful because we had a game plan for her. We put her on with a financial advisor who helped her with her budget on how she can store some more money away, how to cut back expenses. We did put her with a credit advisor who was able to help her build a plan over years to buy a property. It took 2.5 years, but she bought her property. And I think about the importance of helping our people become buyer ready. And when they walk away, even if they're not ready at this time, that's okay. Because many times, just the fact that they come to the table, I can tell you, Todd, that there are more people within our community who deny themselves more than the banks do. Yep. Just because they hear that, Chase released a new guideline that has a 20% down payment requirement and credit score over 700, they just think, oh, you know what, that's all lenders across the board. I'm now out the game of being able to qualify. And so I can't speak to you on the importance of being able to give people hope that it is possible, giving them a game plan in which they can achieve the American dream, and that's vital.
Yeah, I appreciate you sharing that. I think towards the end of this, we're going to go into a lot more depth as to how we provide that hope, different things that we can do to reach out and provide that education, because you're right. A lot of times, the first time we meet with somebody, someone at least has the desire to become a homeowner, but we give them really the tools to get there. They go out and, they're now a client later on down the road. And once they become a client, what happens, Nick? When you've got that gal that you were just talking about, I assume that once you got her into a home, what happened after that?
Todd, that's phenomenal. That's a phenomenal segue. So she's an LVN for Kaiser. Okay. In the last 3 years, we've done 7 transactions for other nurses. Because what happens is when you give somebody that hope and you walk them through the process, you see, people tend to underestimate the importance that even though this is a transaction-based business, you have an impact like that, that's residual income that you can create. When you have a loyal person who swears by you and what you've done for them, they become your greatest voice to their community. And so I just really, it's really important that you ask that question, because I mean, think about that. That's one loan that we did that turned into 7 transactions. We didn't pay a dime for it. And so the cost to acquire a new business has shrinked a lot because the work has been done organically through helping people, one person at a time. Very important.
Yep, I appreciate that. As we talked earlier, some additional demographics, we kind of scrolled through some additional slides talking about the importance of being sensitive to the needs of minority populations and their use of credit. On our end, we actually work with different lenders that want to focus on this demographic to kind of lighten our guidelines as we can in a responsible fashion. We find out, how can we demonstrate that someone who doesn't have a credit report can actually make a mortgage payment, they can make a regular monthly payment, and they're not going to become delinquent. There are different things that need to be taken into account. Here's a very good picture of what today's loan origination population looks like. With the average loan originator being a 53-year-old white male and 72.1% of all originators being white. There's within organizations, we need to reach out to those other races and bring them and include them in learning how to participate in this business too. And they're going to become some of the most valuable resources for bringing in business and really connecting with those populations. That'll help us build trust and build a bridge between the consumers and lenders. We talked about the importance of including down payment assistance. Most minorities don't have resources they can fall back on. They don't have that intergenerational wealth. So just including down payment assistance as one of the highlights of all of your advertising. This example of something that we've put together with other organizations to kind of encourage to give that hope. And that's really what it boils down to, is we've got to provide that hope. We find that as we get out and advertise, and we'll talk about some of the ways that we do, 6 in 10 of the leads result in a qualified home buyer. So we've got about a 60% capture rate. Out of those 60, out of that 60%, 1 in 6 of those buyers are actually going to use down payment assistance. The other 5 are actually going to use some other program. They're going to either figure out how to come up with a down payment on their own, or maybe they do have some family members that can scrape some funds together. But it's really that down payment assistance opportunity that got them to make that inquiry, that kind of gave them that spark of hope to reach out and say, hey, maybe I can get that. And then maybe they found out I don't need 20% for a down payment. And that's probably one of the biggest misunderstandings that a lot of people have, is the large down payment that they think that they need to get into a home. But again, they just need that. They need something to bring them in. Usually it's down payment assistance that gets them to pick up the phone and make that initial call.
Hey, Todd, really quick, I did see a question pop up. Someone asked, what was the median age of an African-American loan officer at the 9.16%? And it's 55 years old.
Wow. That was a statistic I didn't have. That's, yeah,
55.
we've definitely got I have a hard enough time sometimes talking to my kids. I can't imagine trying to put a loan together for, trying to reach out and put a loan together for them. And, I don't know, we'd speak the same language there. But anyway, some of the effective, kind of going into this advertising, this will give us an opportunity to have much more of a discussion. At this point, we've just been kind of going through the material. But as far as effective advertising that we found, online advertising and social media, we'll talk about some of the platforms that we've used where we've seen the most success, and really for a very small amount of money. Realtor training is something that can be very dynamic to target this demographic. Builder presentations can be good. Obviously, local radio and news networks, there's different ways that you can get involved in those, a lot of times for free, just through initiatives that you take on. One of the things I really like are employer promoted education to their employees. You've got a captive audience, people that want to learn, they're employed, they want to become homeowners. And then finally, homebuyer seminars. And we've invested a lot in developing homebuyer seminars. We have one called the UHousing Initiative that we participate in with Legacy, and that's geared specifically towards African-American homeowners. And we target or we partner with churches to be able to have those homeownership. And we'll talk again more about that. On our end, we use Facebook, Instagram, and LinkedIn primarily are the three platforms that we've had the most success with. Within those particular platforms, we find that we get our biggest bang for the buck with, and I've actually got my Zoom covering up part of that slide presentation. With the top of the funnel is kind of the individuals that, well, anyway, we'll start off going with paid leads. We pay about $2 to $3 for people just to fill out a form. And that's kind of where we get the most excitement or the most response. It's just people that they just need to fill out some simple information. It's not real time consuming. Usually it's some sort of down payment help or something that's caught their attention. Everything we do includes a down payment or that down payment help. And then, on our end, we don't have an origination team. So we then, when we bring those leads in, we refer those out to our partners like over at Legacy or Altera, so that they can actually then originate those particular transactions. But we do this so that we can kind of find out what works and keep a pulse on what's happening out there. And then the paid leads that request additional information, those cost us $6 to $7 a piece. And then finally, paid leads where they actually submit a loan application, that costs us just under $11 for those particular leads.
Hey, Todd.
Yeah.
Hey, buddy, can I jump in with just two things?
Jump
if you don't
in,
mind me a second?
definitely. Yeah.
The first was if you go back up to your avenues of advertising.
Yep.
That's the 7 that you did. The one that I wanted to highlight that we've seen great success in is there's a powerful component in connectability and being able to storytell, which is really powerful.
Yes.
And so one thing that we do a great deal at Legacy is we allow our clients, we ask them, if they could tell their testimonial by way of video, and being able to share that on social is powerful. And when you think about the timing of, the social unrest and what's happening right now in the country, I want to give you some context in terms of what you pay for advertising. So on our Legacy Facebook page, we had a caption, and it said, because Legacy Home Loans happens to be a Black-owned mortgage company, and it said, Black-owned mortgage bank lends $50 million to home loans during the COVID-19 pandemic, right? And it was an image, okay? Now, let me tell you the kind of activity this post has had, just to give you context on the desire people have. It was liked 13,000 times, 1,000 comments. It was shared 4,000 times, and with a $47 budget, Todd, it's been viewed organically 489,000 times.
Wow, that's amazing.
It's been reached. And so the amount of new leads that has come from that, there is a strong appetite for people who want to work with individuals who look like them. It's super important, which is why it's also important that companies across the industry really focus on growing and nurturing future minority leadership in this country, because there's a very tribal instinct that we have to work with people who look like us. And so if you have the market dominated, you said 72% of individuals who do loans, are white males. It just really disconnects from the consumer who is our future buyer, and so that becomes a need throughout the industry. Just wanted to point that out to you.
I appreciate that. Yeah, that's those video testimonials are extremely important, and even just doing the video advertising, it speaks so much more than what we can do in print. One of the things we've had a lot of success with is really reaching out to the realtor community, whether they're realtors, or realtists. We have partnered, for example, with the realtists to create a certification that will allow them basically to be certified on down payment assistance product offerings. And that we've had a huge response in that. We'll see some of that a little bit later on in the slide deck. But there's really two ways that you can approach this. One is you can put together just a continuing education class where it gives you the opportunity to meet with realtors, discuss the problems. A lot of the information we provided in the slide deck is valuable for those just to help them understand the opportunity that exists within these minority demographics. In addition to that, it gives you an opportunity to build relationships with them. Then you move on to training those realtors or realtists to be able to, we used to do a class called Double Your Business in 60 Days. And it was just an opportunity where we could meet with real estate agents and talk about things that we found that were effective in helping bring clients to the table. that changes, you know, as time goes on. We see, as Nick pointed out, a huge need for media-driven videos, things of that nature. One of the things that really took off for us just recently is we had one of our team members, her name's Ty Christensen, she's in charge of our government affairs, and she talked about her great-grandmother who purchased a home. She was a former slave. She purchased a home, and in purchasing that home, that was the catalyst that allowed her to send her children eventually to college. Those children were college graduates that then had a higher income, and they were able to send their children to college. And now she is benefiting from that. She's been able to go to college. She's graduated, and her kids, she's going to pass it on to her kids. And all of their family are homeowners. You know, it's just, it's a legacy that gets started with that first individual that develops that hope and reaches out. So again, realtor trainings are a great way to partner. This is a group of realtists that I kind of alluded to earlier, where we created a certification that was specific for NAREB, and within NAREB, that down payment certification has been very big for this particular group. Again, a lot of these slides, you're going to have access to the slide deck afterwards. You can come back and look at these. You know, radio, television, again, that message of hope, being able to provide videos in there and stories. If you've got stories that you can share, we put together a You Housey event that I alluded to earlier. That particular You Housey event has created some very interesting stories for us. This is our partnership with different Black churches throughout the country. And as we attend these homeowner events, it's just amazing some of the stories where we had a gal who was in her late 50s, who afterwards came up, and unfortunately I wasn't at this event. This was this is our president, Richard Ferguson, that was there, and she came up to him and she just said she thanked him for putting on this event. She said that she had never felt worthy up until that particular time to be a homeowner. And for us, that was just, how do you not feel worthy to be a homeowner? Everybody that is responsible should be a homeowner. Nick or Jason, I don't know if you have anything to add to any of this, but
yeah, no, that's actually a really good segue, man. There's this whole concept of the gospel of equity is really, really powerful. You mentioned ARAB in 2017 and 18. I actually served as president for one of the local chapters here in LA, and we put on this event with a church in the city of Compton. It was a community day event. And I'll tell you that we estimated initially that we'd have 300 people, who would come to this event. Ended up being 700 people who came to the event. And it's interesting, the story sticks out for me is that the event started around 10 o'clock. We got there around 7 to set up. And when we got there, there was a mother there with 2 kids. Had to be in between 5, and one was still in the stroller. The event, she was 3 hours early to the event. Now, Todd, people don't show up like that early to a basketball game, okay? Let alone a community day event. And so we asked her, why she came so early, and she said that she looked down at her kids. She got a little emotional and said, because they're worth it. I need to figure out a way on how I can get into homeownership. She grew up in a place where her parents did not own an actual property. Matter of fact, you have a 63% chance to rent if your parents rent it. And so this whole idea of passing down home ownership is really important to break these curses of wealth throughout family sectors. And so, again, man, just speaking to the work that you're doing here, I just can't speak enough to the amount of people who truly desire, and how we as an industry have, I think, done a pretty poor job at truly providing the hope that's needed. You might not be ready today, and that's okay. Right. But one of the things that we could probably segue to, I think that's really important to talk about is, as important as it is, to get people into homes by any means, as a mortgage banker, right, there's still sound banking that has to happen, right? Good underwriting, it's determining loans that make money and those that don't, and the client's ability to make on-time payments. And I know Jason wanted to reference a conversation too in terms of the economics of these loans that we do, but it's a duality, that we live in as mortgage bankers, where you want to put people into homes, but then at the same time, you got to make sure that, you're educating not just the consumer, but also the agent too, that, not every client needs to go into a DPA loan, right? Many times there's less money being made as a mortgage bank on down payment driven loans. You kind of dictate how much can be made. And so there's a dual responsibility of being able to both educate people, but also educate the realtors as well, who send you those leads and that say, hey, look, not every person needs to be in a DPA transaction. There are some of these DPA programs that actually, provide actual loans. They're not forgivable. And so many times those loans are going to, when you add on the interest, of it, the actual cost of borrowing to get into the home sometimes could outweigh the equity appreciation. And so I think that the overarching point of educating the community, both in real estate and the consumer, becomes vital because, people like us, if you are focused mainly on the African American or Hispanic communities, sad as kept, but, there's a saying that Dr. King once said that when, white people catch a cold, black people catch pneumonia, right? And he talked about from an economic perspective, right, that, when there's mass unemployment in the black community, it's a moral issue, right? When there's mass unemployment in white communities, it's a depression, and so we have, so many times when there's, these type of economic downturns, African Americans and Hispanics are the first to be let go, right, of their jobs usually. And so because they don't have a family network, they don't have the savings, they don't have the equity because they don't own properties. Now you put them into an actual home, let's say, right, and they can't, make the payment because they had a financial downturn. It becomes a challenge on both sides to put people in the homes and to keep them in the homes. And the only real way to allow people to amass wealth is their capacity to make payments over the duration until equity can then appreciate. And so it's just equally important too that we talk about the responsibility of lending as well, where we get our people buy ready. I mean, I can tell you now, Todd, I've had clients, as a matter of fact, last week, because I still, every now and then can have clients on a referral-based basis. And there was a client who got pre-approved, and she came to me seeing if we can, make the deal better. When I looked at her situation, here's the context, right? She's the first person to buy. She's the first person to graduate from college. So she's the most successful in her family network, right? Which means if she gets into an actual downturn, she can't go to somebody for help. She's on her own. And so the way she was going to qualify for the loan was a down payment program, but she didn't have more than 2 months in the bank in case she got into an actual problem, right? And so many times what might happen is loan officers, which is why, again, education is equally important to responsible lending. You don't just put somebody into an actual home and then wish them luck, right? You want to prepare them to the idea of owning. And so this client in particular, even though she was pre-approved to buy, she wasn't ready to transition from renting to owning. Because there's a cost to owning as well, right? She can't go to the landlord to fix her issues on plumbing. Those are not her issues. And so I think there becomes this, again, it becomes a, we're so driven on, transactions and just trying to make money, which is responsible. And I mean, I understand. Like I tell my sales team all the time, right? You got two options. You can have a great month or a great career. And if you are driving your sales team to have a great career, then you're going to help them understand that, hey, sometimes it may not make the most sense to put somebody right now who can buy. It's better that you put them into it, because that, I can promise you that that client, she didn't get that from the other loan company. They just got to get her into an actual house. But I can promise you that more times than not, they're going to appreciate the person who really had their best interest in mind. And that kind of loyalty is going to drive a long way to have decades of success in this business.
Yeah, I think, just again, education is really the primary thing that we can do. And that's really our best form of marketing and advertising, is that education that we provide to the community. And ultimately, we can help them make the decision that is going to be best for them and their circumstances. And that's one of the biggest things that we try to do and that we encourage lenders to do as well, is position your sales your sales team not as a sales team, but really as a borrower success team. They are there to make sure that home buyer is going to be successful. And again, sometimes you have to postpone a transaction because it just doesn't make sense for that individual. But as you act right, that's going to come back and benefit you. Jason, I see you're off mute there. Do you have something you want to add to this?
I'm really enjoying this conversation, guys. I think what you're talking about is extremely important. And I do have a few points. I've been writing a lot of notes and just thoughts as you guys have been talking, and I think it's really great. And Todd, I think it's really great what you do. And Nick, I always love your passion. I've been in minority lending for almost 30 years, and I think DPA programs, down payment assistance programs, and mortgage is sort of where passion and the economics of doing business come together. And they don't always align. And so I do want to talk a little bit about what that looks like from a strategic perspective. I hope the audience is a mix of sales, operations, and operators, owners, and presidents and stuff. But I do have about 5 points, and I'll try to be quick. I know we don't have a lot of time left, but one, I think from the beginning of your presentation is it's ultimately what kind of country do we want to have when we're gone? Because we're a very, very young country. If any of you have been to Europe, you go over there, they kind of laugh at us because they've been around 1,000+ years, most of those countries or more, if you go to China. And we're babies. We've been around a couple hundred years. This country is still evolving of who it's going to be and what it's going to look like in its real future, right? It's an adolescent, if at best, in terms of a country in time. And so this is going to be a huge melting pot of a country. And I think you said it best when you said housing is that sort of the cornerstone of the economy. It's what I heard you say, or how I interpreted what you said. And the gap of home ownership for minorities is still very low. And we need to change that, because do we want a poor country, or do we want a wealthy country? And that's going to be really important for Latino home ownership, and for the Latino demographic. It's a little bit different because it's more immigration based, right? So a lot of people come here, and no immigration's gone down, but there's still a very large portion of immigrants, first generation immigrants here, and then there's second and third and fourth generation. And as it goes down, it changes, right? It assimilates differently. And you guys are right. Everyone comes here to leave a legacy, to create some sort of generational future for their family, whether you were Irish, Polish, or Chinese or Latino. It doesn't matter. At some point you came here because you wanted a better life. Financial literacy is a huge issue in that process, and I think you outlined that. Affordability is a big issue as well, as I think people probably know. And I do want to, so this is going to be, I know it's going to seem a little bit of a Chenoa commercial from my perspective, but to me, it's just a means to an end. So just going to put that out there. Affordability is a big issue in our market today across the country. And a lot of down payment assistance programs do have some limitations that don't really align completely with where price points are going, right? And so one of the things that I like about your product is that you align with the market, right? Where's FHA going? Where's conventional going in terms of loan limits? And you align with that very well. And so I think that really helps on the affordability side. Now there's income issues that I think come with that are harder, right? But that's our job, to try to figure out how to educate and help a consumer qualify for a mortgage or become mortgage ready at the end of the day. There is absolutely a professional gap that I've never seen that statistic. I'm gonna have to steal that from you, because I've always known it to be, I've always felt it. Like I said, I started in this business, I was 18 when I started in this business. So I've seen this business grow. I've grown with this business, but I haven't seen this business from a demographics perspective really grow. And that's our fault, the industry's fault, for not promoting and educating and bringing more people in to the industry that are representative of the markets we're trying to serve. And that does help a lot. And I think it's really, really important. So I think we have that thing. So I think one thing to the audience is, your company has to have some sort of strategy on acquisition of talent in the representation of the talent or the market that you're going after. And there's a lot of great ways to do that. I know we don't have time to talk about that here, but there's a lot of great ways to do that. And certainly we could another time. But lastly, the business side of this is important. And I wrote 3 things down. if you want to really go after this, I think first of all the mortgage companies that are listening, you got to look at what percentage of your business is to the underserved markets, whether Black or Latino. And if it's 10% or less, you're doing it wrong. You need to grow that somehow. And it may be the professional talent acquisition side of it. That might be one. But the other three things are what's in your toolbox. You need a national product that's a DPA product that has a little bit more competitive and economic advantage than some of the sort of the vast DPA programs that are out there. I'm not saying they're bad. What I'm saying is they're hard to implement. Operationally, they're very complex. They're all over the place. They're all different. The economics are very different in a lot of these programs, usually very unfavorable to the company, where, you know, Genoa is at least 100 basis points, if not more, favorable in that structure, and it's a national product that I can easily implement and become efficient at that product. You know, so that has to be in your toolbox, and it has to be in your toolbox because if you want to work with realtors need first-time home buyers in their arsenal. They need first-time home buyers in their marketing strategies because they need move-up buyers and they need first-time home buyers. That's how they do their business. And you got to have those products in your toolbox, and you got to find the right ones. On the economics and the process, I think, you know, trying to move your company into a space where things can become more streamlined, you can do that with this DPA product. You can create that, and you can also work some strategies where compensation, because one of the biggest challenges I think for mortgage companies is the LO comp rules around DPA versus other traditional products. So how do I work this? Well, I think Genoa makes that a little bit easier. And I think there are strategies that you can deploy and be very compliant with being able to deploy these strategies, being realtor focused, first-time home buyer focused, being professional talent focused, and making life a little easier on your operations and the process to be able to roll these out. So those are my, you know, quick thoughts before, you know, this thing is over on the whole, you know, structure of being able to do this sort of strategy right.
Thank you, Jason. I appreciate those comments. I actually got involved in mortgage lending with, that's a perfect example of what a CEO should look like there too.
My wife said no shoes in the house, so I wear a tie, but I can't wear shoes. So
that's great. I'm glad you got that in there. I actually started my career in the mortgage industry catering to the Latino community. I speak Spanish, and I found that the more I got involved and immersed myself in the community, the more successful that I was. And I actually missed those days when, you know, I'd go to some of the local events and, you know, enjoy great food and great company. And it was, you know, initially it was outside of my comfort zone. It was difficult for me to do that. But it, you know, ultimately we ended up hiring other native Hispanic loan originators to work in that demographic, because I found, you know, I realized where my limitations were, and that I wasn't always able to help. I couldn't always relate to certain circumstances just because of the way I grew up. Anyway, I don't know if there's any other questions or anything that we have. I don't have access to the question bar. Tom, I don't know if there's anything specific that we need to address here.
Yeah, Todd, thank you. That's a great segue here in reminding our attendees, now is the time. We've got about 7-8 minutes left. If you have any questions for Todd, Nick, or Jason regarding, you know, their comments or just over kind of today's presentation in general, I encourage you to submit those via the chat and the Q&A function. And while you guys are doing that, looking at what I've got here.
Tom, I do have one
question
more thing.
yeah, go for it.
And that is, I think I left out is, you know, from a workflow and operational and economic standpoint, some of those that are on this call, if you deal with that, right now, a lot of DPA programs are taking a very long time to to, you know, come off the books or sell. And there is no ability to, you know, sell direct if you wanted to do that. And I'm not saying you could do that with Chenoa, but that time frame takes long, costs more money. It puts a big burden on post-closing departments, et cetera, to accomplish that, especially with volumes, you know, through the roof where they're at now. It also puts a burden on warehouse capacities, depending on what volume of DPA you're doing. And one thing that, Todd, you've been, you know, very focused on is making sure that you're helping lenders clear that out quickly, right? Your purchase times are that of standard aggregator times or faster. And so, I think as you're trying to figure out how do I deploy these strategies in my company, all these little details are the ones that slow you down from being able to do this well. And so, you know, I think I just want to make sure that, you know, that's another thing I think as people go back and think about how do I deploy this.
I appreciate those comments, and I appreciate the plugs, though this is, you know, obviously probably the biggest thing I wanted to bring out in all of this is if you want to get involved and you want to, and you really, well, first off, if you begin to get involved in helping bridge this wealth gap and in serving these communities, it becomes addictive. It becomes a passion. It becomes much more than just a job. It becomes something that you can feel good about. Something that will drive you to do more and more, and that success, you know, will continue. But the other piece is you can't just jump in and jump out. You can't. There's not a magic button that you can just press and all of a sudden, you know, you're going to get these leads. You got to put in the time. Once you put in that time, it's going to pay some great dividends. But you've got to put in the time, develop the relationships, you know, and put together those home buyer events. You're going to have some that are extremely well attended. You're going to have others that, you know, they're not as well attended as you would have liked to have had. But it's the consistency. As you continue to get out there and educate the community, that's what's really going to pay the dividends.
Yeah, I agree with that, Todd. I think if you approach this as a mission and a strategy, you're going to do well. If you approach this as a tactic or a task that you need to do, you know, it's not going to work.
Yeah. All right, Tom, any questions that have come up that we need to address?
Actually, got a two-parter here. What would you recommend to licensed financial advisors to engage with a realtor or a realtist? And then the follow-up being, should one consider getting a mortgage broker license?
All right. Jason or Nick, do you want to answer that, or do you want me to throw in my 2 cents? Nick?
Yeah, sure. To the first part question about the licensed financial advisor, I think that it's important to note that many minorities don't have access to financial advisors or don't even use them. They think they need too much. They think they need, you know, more money than they need to even speak to a professional about a strategy. And so I think that for that person, I would say to put yourself out there, you know, in the community so people know that you are available and also accessible. I think that number two as well, because you have access to your own book of business, knowing your client's, you know, profile, then you know, you would probably know if that client is tax burdened because they are still renting. And the idea there's still tax benefits to buying a property. I think it's really important. So I would even advise that person, consider yourself doing some type of, you know, co-event on Zoom with you and the agent that you might know directly to the consumer. And so they actually can see that you work in tandem with agents. You know, somebody might come to you who needs the advice so they can figure out how they can afford to buy that property and still have money to invest in the market. And so that would be my advice to that person who wants to have a strategy with agents.
Thanks, Nick. Jason, did you have anything you wanted to add to that?
No, I think I think Nick hit it on the head. I think you're absolutely right. Most minorities don't have access to them. And if that's something that is their strategy, and they want to add that, they want to add, you know, real estate or loans or to their part of their business, then I'd say, yeah, one, you got to engage realtors, and two, you do have to be licensed. So hopefully that is their strategy. Hopefully they do want to be financial advisors to the minority markets.
Yeah, I would definitely recommend getting licensed, for sure. All right, Tom, any other questions?
Yeah, last one I've got kind of from my end here, and it's thinking, more strategically for lenders either engaging directly with Genoa Fund or another down payment resource provider. In thinking about internal adoption, from your experience, Todd, in particular, do you feel that overall adoption, I guess, is there an area of opportunity in particular that stands out to you for clients to be driving, better resource of understanding for the DPA options available? Does it come from, say, like a stronger need for a top-down buy-in approach from the owner-operator down to the originators, or maybe more of a need for additional training or understanding of the available options between the originator or realtor referral partner?
Man, that's a good question. Historically, we've found that most companies get involved with down payment assistance not from the top down, but it's usually the loan originators that are pushing the agenda. And I think that's, that's the way it approaches. I call it the tail wagging the dog. That's not the way necessarily it should happen, but unfortunately, Jason brought up some very good points earlier about some of the challenges that companies face in utilizing down payment assistance programs. And so you've got to be able to learn how to balance the needs of your company, the financial needs of your company, and all the different pieces with being able to offer down payment assistance. One of my biggest suggestions is don't allow yourself just to become a customer. Get involved, get to know who you're going to be partnering with, so that if you do have a challenge, you can pick up the phone and you can call somebody that can do you a favor, or make something happen for you. You're not just another customer that is inside that hamster wheel that, is really not getting any special service. Make sure that you know who you're working with, and develop a plan within your organization. I think the best organizations that implement down payment assistance, it does come from the top down. It's a structured approach, and involves regular training. And that training can be anywhere from how to use down payment assistance, what's working, what's not working, to maybe even developing with your down payment assistance partner, developing maybe something a little different that you need for your markets. We've been able to do that with a number of different mortgage companies where there were some specific needs that they had in some different demographics. We were able to meet those needs for them. If they had never spoken to us, if we wouldn't have developed that relationship, those things never would have happened. So hopefully I answered that question there. Again, I would highly recommend that the leaders of the company get involved in this. And as we mentioned in the slide deck, typically 1 out of every 6 transaction that you bring in with with marketing dollars or advertising dollars that are geared towards down payment assistance is actually going to turn into a down payment assistance transaction. The other 5, they're going to realize they have other options that they can utilize. Maybe it's a VA loan program. Maybe it's a rural development program. Maybe, again, they thought they needed a 10 or 20% down payment and they have 5% saved,
That's great perspective, and answered my question and then some. So thank you, Todd. And I know on that note, coming up on the top of the hour, so first off, I want to thank all 3 of you gentlemen. This was a fantastic conversation, and really touched on, a lot of different elements and angles that surround the utilization of down payment assistance programs and kind of the why and the how behind it. So Jason, Todd, Nick, I want to thank each of the 3 of you. Fantastic discussion, and reminder just to our attendees, we'll definitely have a copy of the recording of today's discussion as well as a copy of the slide deck in our follow-up email for you. So gentlemen, thank you again. This is a great discussion today. I really appreciate you all joining.
Thanks, Tom. Appreciate it. Thank you very much.
Thank you. Well, on that note, I hope everybody has a great afternoon. Stay well, stay sane, and we'll catch up with you soon. Bye, everyone.